Hey, welcome back. I'm recording this early today. It's about 3 hours into regular trading, so this is not a closing recaps per se, but the first 3 hours of trading have been surprisingly constructive given the geopolitical backdrop. SPY, QQQ, IWM, and DIA are all green, with QQQ leading, IWM participating, and TLT catching a slight bid. So this isn't a panic day, even with the war in Iran picking up. And the main read so far, which we'll actually see when we jump into the sectors, is it's not actually a clean everything up rally, even though the indices are up quite a bit. It's more of a selective recovery where the market is still rewarding tech and growth, but not blindly chasing everything. Quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you to everyone who's already subscribed. I really, really appreciate it. Sector tape mattered a lot today, not just the headline indices, because depending on how you were allocated, you might not have felt all of those gains. Technology is clearly the leadership group. Semiconductors are doing the heavy lifting, and software is participating, but still not acting as cleanly as chips. Energy is actually lagging, even with Iran headlines, which is important because the market's not pricing this morning like an uncontrolled oil shock. Healthcare staples and utilities are not leading, so this is not a defensive rotation. It's more of a risk on bounce with selective leadership and clear preference for AI infrastructure. Although we're now starting to see some reshuffling of the relationship between the chips and the more questioned software names, with a lot of those recovering from their early dips. Macroeconomics are giving the market enough cover to bounce for now. Jobless claims came in light at 215,000. Yields are not spiking. The dollar is muted, and oil is backing off instead of confirming the worst case Iran escalation trade. That matters today because yesterday the fear was that war headlines plus oil inflation would force yields higher and crush duration again. So far today, though, the market is saying, yeah, geopolitical risk is real, but unless oil and yields start confirming that stress, equities are willing to recover. Gold being strong still tells you there's hedge demand underneath the surface, but this is not a sell everything kind of tape. The first story is Microsoft, and an unlikely culprit was a headline from Starbucks. And the pressure here is not just generic AI capex. It's the market reacting to the idea that the enterprise software customers they service may increasingly build their own AI tools instead of relying on legacy software vendors. And that Starbucks headline matters because the company is reportedly developing in-house alternatives to a Microsoft inventory system and an IBM maintenance tool. And that hits directly at the software bear case. If AI lets large enterprises replace pieces of the SaaS stack internally, the market is going to start asking which software revenue streams are actually defensible. And then the second story today is Meta, which fell after announcing a massive new AI data center investment in Canada. That keeps the same debate alive around whether Meta's AI infrastructure spend becomes a real revenue opportunity or just another capex burden the market has to discount. And for both of these stories, Meta and Microsoft, all you got to do is look at the charts and see what happened. We had huge dips on those names, but then they started to come back to life. So again, you have to take this news in the context of how the market reacted when it happened and how it reacted once it hit pertinent levels. And so then the third story today that I want to cover is SMH. And so the chip tape is being supported really by SK Hynix's US market debut tomorrow. The ADR is expected to begin trading on Nasdaq tomorrow under SKHY. And the deal is reportedly heavily oversubscribed, which reinforces how much institutional demand still exists for AI memory. And the whole build out there and for the exposure to HBM. So the bigger theme today is very clean. Software is still being questioned because AI may compress parts of the enterprise stack, while chips are still being rewarded because they are the physical bottleneck powering the whole AI build out. And then underneath all of that, SPY and QQQ are recovering even with Iran risk picking up, which tells me the market is not ignoring the war. It just says that as long as oil and yield stay contained, AI infrastructure and high quality tech can still catch a bid. Now let's do a quick market forecast using the SPY as a proxy. I have the monthly, the weekly, and the daily here. For the monthly, the SMA stack remains constructive, the simple moving averages, with price still well above the longer-term 200-month framework and the 20-50-month structure still supportive. The weekly stack is also bullish over here. However, it's becoming a bit extended so that a failed follow-through is going to matter a whole lot more. However, we are consolidating near these all-time highs. So I really do like that. However, if we come down to the daily, we can see that while we are above the stack now, which is great because we had a hard time regaining that, we are still not in a daily super uptrend. And for me, this just simply says that we're not in an uptrend. I wouldn't even read this as we're in a downtrend. I would say that we're consolidating. But sometimes I like to use Supertrends to confirm what we're not in. I find that to be helpful because sometimes it's hard not to know where if you're chopping or continuing. But we're range bound at the moment. However, I'm looking for a reclaim of 750 because we know from a lot of previous videos, I've talked about this, at 750, there's a lot of GEX that we'd have to break through. But even more than that, that, there's been some humongous prints on the dark pools at 750, which could be distribution if we can't get above it. But what I'd love to see is a really clean break with volume above the 750, or if not with volume, gapping up overnight, and then a retest back down into 750 and a continue upward before I'm thinking about getting back into SPY. However, I would be using this as a regime indication, meaning if this is still constructive and not breaking down, I'll be looking for individual plays in individual tickers, or thematic plays, or individual sectors. All right, so let's look at Microsoft. And fundamentally, Microsoft is still one of the highest quality compounders in the market, with recent revenue and EPS growth still strong and valuation much more reasonable than AI infrastructure names. Sentiment is not broken, but it's definitely in repair mode because investors are questioning AI capex, Copilot monetization, and whether the Xbox restructuring is a distraction or discipline. And of course, what happened today with Starbucks. So let's jump into the actual chart and see what happened. So the first thing to notice is that we had a huge dump today, and that may have looked like it happened because of the news, and I'm sure that may have been a catalyst. But this was a very well-known level to us. In fact, if you look at it, we came right back down to this fib. It touched it and rebounded, came back above S2, and now we're S3. So it was a pretty deep correction there, not correction, but drop. And then we came back to S2, and now we're oscillating between S1 and S2 because it's kind of a tight range. So what I would say is this isn't odd. And in fact, we repaired this gap here. I had previously thought maybe this was a repair candle, but we fell down there. And then what I also want to point out is that on the IGV, the same thing happened. We had this big gap right here. We filled that gap. It came down perfectly to this pivot point, and then refilled it. And we talked in previous episodes about how 100 is actually not the psychological level for IGV. 90 is, and it came right back down and filled that. I mean, it would be worse if we see it come all the way back to 88 and fill it, but that could be something that happens just to repair these gaps. I see it less necessary on the hourly, but if we look on the daily, there was a bigger gap here. There still is that gap right at 88. Pardon me. So that is possible. And if we came down there, we wouldn't break the trend. But just to stay on Microsoft there, this wasn't unknown to us that this could happen. And in fact, I was talking to another trader yesterday who said that I missed the Microsoft run here. He was saying it reminded him a whole lot of what Google looked like last year or the year before. And I said, I don't think so, but we'll probably have some gap filling. So this is not a bad time. So he got a little bit of a gift today. I don't know if he purchased it. Again, not financial advice, but I certainly didn't close any of my position. You can see I'm highly allocated to it in this particular account, and that didn't shake me out. And in fact, I kind of feel like maybe that's what we had, because the news came out, got shaken out, and then somebody backstopped it right at that fib mark. So it's very interesting to see. In fact, we could even come back down to that. And as long as that holds, or at least the 368 holds, I'm still okay with this. Remember, this is a very long-term thesis for me. Microsoft is undervalued. And when the market has some kind of valuation issue going on, it often takes a while to play out. All right, so the next big one to look at is Meta. And Meta also had a huge dump today, right up at the beginning of the trading day. It felt pretty significant, but now we're up 1.8%. And one of the reasons this feels so significant is a lot of people play Meta using call options, and when something is moving about $40 in a day, you can really feel that. However, this wasn't an unknown level. Again, we're coming back up to this fib, which was the 618 fib from the bounce when we got the news about them integrating AI, and also actually this was integrating AI images. And this was when they said that they'd be selling some compute back to the market. But we map our fibs from the swing low. Essentially, we assume that if this was this big news catalyst, that somebody else knew it beforehand, and that was the swing low here. So that's why it's mapped from there. And we came back down perfectly to this 50% fib, and then continued upwards. Also, this 618 is from a higher time frame. But when you start to see confluence between these local, much more recent fibs and longer term fibs, it's really great, which is why I leave so many of these lines on there, specifically with the Fibonacci retracements. The other thing to notice, and we pointed this out, was that on the 4-hour, we had this trend line here that had been going for a very long time, and every time we came up into it, we sold off, came up into it, sold off. But now you're starting to see a bit of a consolidation pattern around it, with some really strong bullish reclaiming on most days. So I really like to see that happening, and if we can get above the 200 simple moving average after breaking this trend line and close there today, that would be really compelling. However, I could see more consolidation around there. But if I actually look at the GEX, I had the GEX up earlier on Meta, We see a lot of action going around the 625 and then towards the end of the month the 650. So I wonder if you guys can see that. Let me pull this over. Yeah, the 625, we have a lot of positive GEX growing. And I believe that's actually just for tomorrow's expiration. And then for the rest of the month, we have a lot more too, building up towards 650. So I feel like we got some shakeouts going on today. And now the short squeeze is starting to push them out. And if we look forward for Meta for tomorrow, this is going to change because it depends where it closes. But the point of control as of today is up towards 612. So our point of control is towards the higher end of our range. I love seeing that. And then also the pivot point for tomorrow is around 600, but I wouldn't be surprised if we fell back down to 586 or even swept the lows all the way to 560. That would take out so many people, close this gap here, and then maybe we continue forward. But either way, this is a name I'm long-term invested in. So those are the levels that I'm watching. The next one is Salesforce CRM. And if you haven't been watching my videos, I'll just cover the fundamentals really quick for you. Fundamentally, Salesforce is profitable, cash generative, and not expensive on headline valuation, but growth is not strong enough for the market to automatically forgive execution risk. Sentiment is clearly a hated or contrarian software setup right now, not leadership, because investors are questioning whether Agentforce is real enough to offset slowing legacy CRM growth. And today's news is the KeyBanc downgrade, which basically says the stock may look cheap, but the analysts don't see enough evidence yet that AI story is working. So let's look at the technicals now. And you can see the same thing that happened with IGV. We had this big pullback, again, probably on the Starbucks news. And we filled this gap here, and then we rebounded coming back up. And this wasn't marked out on my fibs, but again, probably not an unknown level considering we gap filled after this big gap up here. And then we were able to recover above it. Now we're still in a downtrend super trend on the 1 hour, but I do expect a bit of oscillating back and forth between green and red super trends on the 1 hour before we actually reclaim some of the higher timeframes. The other interesting thing about that level, not being unknown to people, is that low end was the border of the lower bounds of the 4 hour super trend for the uptrend. So I'm always watching those very closely. They're very interesting to me. A lot of times the tradable swing trade is when it comes back down to there. If I've missed the trade, that's where I'd be looking to get long, because I say if it breaks the trend, okay, maybe the low of this is where I want to get out. But I also see this as a compelling upside. In fact, if I look at the GEX on CRM, if we still have that loaded here, just bear with me. I made it smaller. Yeah, they were looking up, the upper bounds was at 175. I'm going to need to update this because this happened earlier in the day. But if we look out to cumulative for all of the strikes, which is actually till 2028, the targets are coming in around 200. And I've seen GEX building slowly over the last few days. So it is something that I'm targeting for me personally, coming because of where I got in. At 170, I'll start to take off some. But it looks like the gamma flip line is at 167, and we're going to face a lot of resistance at 165. But again, this is for tomorrow, and this is cumulative. So once this 17,000 of negative GEX rolls off, I'm expecting next weeks and the full rest of the month to be much more positive, because once this negative GEX rolls off, this will be more positive. So I'm looking to reduce my exposure when we get to around to 170 and 175. It also is starting to look like that's not a bad thing. In about 2 days, we have some of the pivot points already starting to calculate for that. And even for tomorrow, the upper R3 right up here would be 175. So that wouldn't be too crazy. And it's a level that I am watching. So the next one is ServiceNow. And to recap, if you haven't been watching the channel, fundamentally, ServiceNow is still a much cleaner growth company than most software out there. With subscription revenue growing over 20% and management still raising subscription revenue guidance, sentiment is better than CRM, but it's still caught in the broader software versus AI disruption debate. So the market is treating it as a quality software, but not an immune software. And today's news is mostly a read through, essentially from other names. If software can stabilize despite the CRM downgrade and what's going on with Starbucks, Now is one of the names that traders will watch to see whether the group is actually repairing. And the same kind of thing happened where we came back in and we filled it, but this was a really aggressive bounce compared to all of the other names that we saw. It happened really quickly. And we didn't do a full retrace down to here. So I guess I was actually expecting it to come a bit lower, below the 100, but the speed at which this was bought up comparatively, I mean, right down there. It must have hit a huge order just waiting for it. But because of that, I see even more conviction in this name. As far as levels that I'm watching, the 125 strike was something that was flagged for me. In fact, the 110 in the near term, I have to update this because, again, these were happening over the course of the day. But the 110 strike, I think we may have already, no, we haven't reached that quite yet. But those are here we go. Here's a nice reload. So 110 might be the first place that we're going to have a hard time breaking through. Up here, which is for tomorrow, this is a dealer cluster, meaning as we approach the 110, there's going to be some dampening effects as the market makers start selling shares. But if we can break above 110 or even gap above it overnight, that would be amazing. And then I would see a real pump up towards 120. And, this is one I'm holding in the very, very long term. So my long-term shares, I'm probably going to let ride, but a lot of my options plays, I'm going to have to start being selective as we start to run into certain resistance. And if we look for some levels of certain resistance there, one thing I really liked about now was that it did break out into a daily uptrend for the second time. So I could start to see some of these upper bounds like 125 or 130 really be resistance. And that would make some sense as that's going to be the 200 simple moving average on the daily up there. So I'm watching that very closely. Viewer asked to cover ISRG, so thank you so much for the comment. Let's set the table by looking at the fundamentals, or at least just covering them on a broad stroke here. So fundamentally, Intuitive Surgical is a high-quality medical robotics compounder with strong procedure growth, rising system placements, recurring instruments and accessories revenue, and very strong margins, but the valuation is still not cheap. Sentiment is mixed. It's not a broken company, but the stock has been derated hard from its highs. So traders are asking whether this is a long-term robotics healthcare compounder on sale or still an expensive growth stock losing momentum. I didn't see any company-specific news that were acted as catalysts. I do see that BMO Capital initiates coverage on Intuitive Surgical with an outperform rating. But other than that, let's just jump into the technicals. All right, so let's look at the technicals here. And the first thing to notice is actually on the daily. I'm going to do the higher time frames eventually, but just on the daily, because this is probably what you're feeling and why people are interested in it, because we came to a 52-week low down here. And there's also been some bullish RSI divergence and a few other things I'm going to point out that are bullish. But I do want to look at the higher time frames to say what's bearish first. And the first bearish thing is in the way that you would have been feeling this on the day in and day out. And that's you've been in a downtrend since January. So it's been a full year of downtrend. And now let's look at the monthly to see what's happening. So we are in a monthly downtrend and we've come to the monthly 50 simple moving average. That tends to be a good time to pick up the stock. If you look at it, it kind of serves that, but sometimes it does come below it and comes to previous breakout zones. And that previous breakout zone here would be 368. So that would be really the first level I would be thinking about getting in at really great prices if I was interested. I'll tell you why I'm not interested in it, but this is the first real level. And in fact, you can see I have a 370 alert there. I set that a while ago, probably like towards last year, because a lot of people in the retail space were interested in this. But I don't want to necessarily play it because it's a combination of two themes. It's robotics and healthcare. And I like to isolate themes a little bit better, or else it's very hard to trade quantitatively when you're trading two themes and then you're starting to make a much larger bet based on execution and both of those themes behaving well. So it's a tougher one for me personally to trade. And again, not financial advice. So that's it on the monthly. If we look at it on the weekly, it's funny that those levels are starting to make sense here as well. We've come down to the 200 simple moving average, but are having a hard time holding it. And I think I've talked about this before. For me to see a level reclaimed, I not only want to see a close above it, I want to see selling above it, followed by more buying above it, essentially saying that once we reclaimed it, selling was part of just that new level. And we found acceptance up there and buyers came back in after that selling. So I want to see selling above the reclaim followed by buying. So for me, the weekly really needs to have this red candle followed by a green candle, or at least just a really strong green candle that would show me we've wiped out a lot of that selling, because right now this is still just a downtrend on the weekly for me. And then if we look at it on the daily, the first thing to notice is that we're still in that super trend, and every time we tried to pop, we came back down. Now let's actually talk about some of the bullish things here, because I know that it all sounded like some scary levels to be looking out for, but just to be realistic about it, the higher time frames are how institutions are looking at these first and foremost. But on the daily, something interesting has happened, which is we have bullish RSI divergence in series, meaning that it's happened a number of times. And I love to see that kind of serial thing going on. It tells me that there is some truth to this RSI, but it also tells me that that has failed a few times. and sometimes the most bearish thing is a failed bullish thing. So this bullish RSI divergence happened. We got a low here with an oversold reading, and then we came and made a new low down here, and RSI was still oversold. But it was higher. And I love that actually, when you have RSI bullish divergence with one or more of them being oversold, that is really great for a perspective long. And you can see that we got bounces every time it was oversold there. So that wasn't a bad place to enter. However, you needed to look at your other levels and be realistic about where you wanted to get out on these individual trades. And then we had a new low here, and we had a more bullish RSI divergence. And then we made the all-time, or not all-time, the 52-week low right here. And we had more bullish RSI divergence. So I really do like that. I believe that trend started to stop after the 52-week low that we got there. And mind you, you wouldn't know you're in a 52-week low each time that this is the final one, because this was a 52-week low before that one was. So it's hard to tell sometimes that that's going to be the final one. But again, you're looking for this RSI divergence, and then you start to go down to smaller timeframes and look for some reversal candles. And we've covered that in my RSI video, which you can check out. But the other bullish thing that we see here is there's been this trend line that's been very nice for this entire time. Let me zoom out here. It's going all the way down here on the daily. We finally broke above that. And now we've come back to retest it. So this would be a place where I'd like to carry out a swing trade if I was interested, for two reasons. One, it broke that trend line, and that's good. I don't know that it broke it strong enough for me to get in on that alone. But the other thing that happened is it finally came above the 20 simple moving average right here. So you have a confluence of two things. You have a break above this trend line, and you have a break above the 20 simple moving average. However, if it doesn't hold that, I think there'll be a little bit more consolidation. And I'll tell you the last part of that in a moment. Let's just mark this out on the fib. So if it loses the 78 on the fib right here, the 78.6, I'm not going to feel great about it. But if it can get back above the 61.8 over there, I'll feel a lot better of it. So it kind of needs to prove that to me before I would actually enter in this. And these have some big dollar moves, so you may feel like you miss it, but you really need to have a larger time frame understanding of where it wants to go here. And I will say, from a fundamental standpoint, it has expanding EPS and expanding revenue, but that needs to be validated by earnings, which is another reason that I am not going to be playing that, because remember, a lot of those are forecasts. In fact, those are all forecasts, what I just showed you on TradingView, except for the ones that have happened in the past there. And we have earnings coming out towards the end of next week. So I am not interested in playing this one personally for that reason. Plus, like I said, for me, I have to be able to isolate thematics so I can hedge against them properly for me to play a lot of these trades thematically and to know how they fit in my portfolio. So that's just a quick rundown on ISRG. Let me know if you want to see any more about that one in the future. Quick reminder, just because someone says it on YouTube doesn't mean it's true. And that includes me. This is not financial advice. I'm showing my process, not telling you what to buy. Always do your homework, protect your capital, and manage your own risk. All right, so that was a quick recap, and I wouldn't even call it a recap because it's only 4 hours into the trading day. This, as you can tell, I started when there was 3 hours. These videos take me an hour to make. So on that note, please subscribe. It really makes it worth it for me. I'm taking time away from my trading day to do this for you. And if you found this helpful, please subscribe. It allows me to keep making these videos, and turn on notifications to get updates. And leave a comment with the tickers you want me to cover next. I respond to every single comment. And if you like planning out trades like a quant, check out alphaharmonic.io. Thanks so much for watching. Happy investing, and stay safe out there.